Hello and welcome. I'm Leo Wang, and today we're dissecting a fascinatingly complex market landscape. On the surface, sentiment is bullish. The S&P 500 and Nasdaq have reached record highs, buoyed by optimism around trade and a strong start to the second quarter earnings season. In fact, an encouraging number of S&P 500 companies, over 50 so far, have issued positive earnings per share guidance, suggesting underlying corporate health. However, digging deeper reveals significant uncertainties that could disrupt this rally. The most prominent risk remains international trade and tariffs. While there's been some positive movement, such as Canada rescinding its digital services tax to smooth over negotiations, the broader threat hasn't disappeared. Analysis suggests that the administration could still reinstate previously announced tariffs if trade talks with key partners stall, which poses a direct downside risk to corporate margins, especially for manufacturers and tech companies. Adding to the caution is the latest outlook on monetary policy. Recent statements from Federal Reserve officials indicate that the central bank is unlikely to have enough clear economic data to justify an interest rate cut in July. This pushes back on investor hopes for immediate easing. This cautious stance is further supported by data points showing a potential slowdown in consumer spending growth, a key pillar of the economy. Despite these macroeconomic headwinds, the corporate world is buzzing with activity. In a major development, the Department of Justice has cleared the way for Hewlett-Packard Enterprise's $14 billion acquisition of Juniper Networks, causing shares of both companies to rally. In another significant deal, Home Depot has announced it is acquiring building products company GMS for approximately $4.3 billion, sending GMS shares soaring. We're also seeing positive news from the biotech sector, with Moderna's shares getting a boost following positive results from a late-stage trial. So what's the takeaway? We're in a dual-track market. On one hand, strong corporate earnings guidance and major M&A deals are providing powerful momentum. On the other, the persistent threats of tariffs and a more patient than expected Federal Reserve are creating a ceiling of uncertainty. For now, the market is climbing a wall of worry, but investors are keeping a very close eye on these developing risks.